Look at how far we have come, my friends. From being almost all in to now really going all in. So unlike many clowns on YouTube who have used the term all in so loosely, I've really kind of exhausted most of my liquid capital and went ahead to catch the falling knife on Alibaba. My hands are currently full of blood. So if you guys have plasters and wish to donate it to me, you can drop me a DM and we can nurse our wounds together. Anyway, I would just like to provide you with some updates on my own portfolio, what has changed for my overall investment strategy, and what I actually expect will happen from this entire developments of this clown fiesta. So if you want to continue on this journey with me, disregarding all the name callings of donkeys or clowns, feel free to smash the like button and we shall indulge ourselves in the current state of Alibaba. So please note that whatever that is discussed in this video particularly is just my own doings and should not be taken as any shape or form of financial advice. I'm not licensed anyway, just a random guy on the internet. Besides, there are 7 billion people here on earth. Don't just listen to one guy and follow blindly. Everyone has their own different circumstances anyway. Even though I know many finance peeps on YouTube like to claim that they are extremely transparent, etc., you really don't know what other sources of income they have. So being a typical nosy Singaporean, I went ahead to stalk some of their channels, and I'm not going to name names. We can essentially kind of estimate how much revenue they make from their videos, and they have so much other streams of income like Patreon, their website, their merch, their application, etc, etc. They might show you a 1, 5, 10 million portfolio, but it might not even be a substantial portion of their net worth, and it can even be treated as play money, even if they blow everything up. So to them, 1 million, 5 million or 10 million might even mean nothing. So don't be too naive and think that everyone is really investing like people on Wall Street bets, going all in, trying to 100x their money in the span of 3 months or something. That said, our investments in Alibaba will make us look like a pure genius or a stubborn fool in the coming 5 to 10 years. Time will tell and there will be no in between. So with that out of the way, I'll give it to you straight what my current positions are. So as of the time of this recording, I currently hold around 70 BABA shares in the US exchange and 400 998 shares on the Hong Kong exchange. So as you can tell, I essentially don't really care which exchange I hold my stocks in because it doesn't really matter to me. I know many of you out there actually do have particular concerns regarding the particular exchange you buy from. For me, because I have access to both exchanges and since they are fully fungible, in the case where the US really decides to pull a quick one, or if China really wishes to flex their muscle and call Alibaba back, I can switch them easily, so I'm not really concerned about it. For the rest of you who do not have this luxury, please check the terms with your own brokerage firms before making any purchasing decision. So, you can also tell that I finally got my cost down to under $180. My cost price for BABA is around 178 now, and 89988 shares is equivalent to 1 BABA share. I converted them to the USD equivalent, so for easier consolidation of the entire portfolio. And on top of that, I also believe that you also realize I recently added Crane shares into my portfolio, which hosts all the Chinese big tech companies like Alibaba, Tencent, Meituan, JD, etc. So for those of you who have been following me on Twitter, quick plug, if you haven't, what are you waiting for? You should know that I committed to doing DCA at around 400 USD monthly. And yes, I will continue doing so until I lose that ability. So for those of you who are curious about the status of my cash flow, I primarily get a small income from YouTube, and I'll probably be starting an internship again starting next year, and also from bursaries. Side note, for those of you who are interested in how much YouTube pays me, do leave in the comment section down below. Actually, I did previously briefly cover that topic before. I'll leave the thumbnail here if you're interested. But the viewership isn't really that high, so I figured out that most of you guys are probably not interested in my financial situation, but just want to listen to the investment related discussion. Anyway, it's not some astronomical sum, and I still get taxed on that amount, even though it doesn't even qualify for Singapore's minimum wage. The last I checked, the minimum wage criteria in Singapore was around 1.4 to 1.6 thousand. So I don't even hit that amount, and yet YouTube still withhold around 10% of my monthly revenue. My goodness. I must however commend YouTube and their business model though. The exponential growth is well warranted. It definitely motivates creators to keep creating, and they also have the ability to retain the attention of their audience in a very mesmerizing and enticing way. So, back to my portfolio, I would also disclose that the current outstanding option positions I have on Alibaba as well. So for those of you who have been long-time followers, I long a call on Alibaba with a strike of around 230 with an expiration of March 2022 near the end of September. So the highest it went, if I remember correctly, I was sitting on around 70% unrealized gains. But then, I did discuss in the video that I was fairly confident it will recover to a higher price by January, and that was my initial exit strategy. Oh boy, Mr. Market did sit me down, and it does seem pretty impossible for recovery judging the current price action. Anyway, I did outline my intention on this March 2022 call, and it was really just my entertainment budget. Side note, my biggest takeaway from these options was that my personality really suits a long-only strategy. I'm only excited in discussions of business models, doing research into industries and companies specifically, discussing different bull and bear theses, market conditions, and macro analysis, not price actions, MACD, Fibonacci, and the consistent monitoring of how my calls and puts are doing. I think it's better for my mental health anyway. Anyway, during the exciting times of Alibaba's nosedive, I added another call, expiring March 2023 this time around, with a strike of around 220, and I paid around 1000 USD for it. To me, this is really just a leverage position I'm comfortable taking for more exposure to the underlying stock. It might bite me in the ass in the future, but I honestly have quite a high conviction that the stock won't stay so beaten down for so long. Maybe I'm just a moron, who knows. Lastly, I also opened a cash secured put position where I sold a put on a 9988 at strike of 127.50, so with the expiry end of the next month. So I know some of you might be wondering, didn't I just say that I went all in? How can I still do a cash secured put? So this put position firstly could be rolled further out if I do not wish to get assigned. While secondly, I have cash secured elsewhere, which I do not wish to touch. But in the event where I really don't mind getting the stock, then so be it, I'll add another 500 9988 shares. To the freaking moon, guys. I'm not even affected by the share price movements anymore at this point of time. Clown or genius, only time will tell. And don't worry, statistically speaking, I have lots of time on my side. Not trying to flame anyone, but just pointing out a mere fact. Funny thing is, millionaires and billionaires probably wish to trade their wealth for more time on planet Earth, while youngsters wish to trade their time for wealth. So the simple conclusion is, for those of you who are in your 30s and 40s, where you still have a relatively long runway and are probably leading a comfortable life with a decent income, that is the best stage of life. Appreciate what you have in life, strive for things that you think are important in your life, and don't regret when you are at the end of your life. And now, to answer the age-old question many people have been asking, even if you want to invest in Alibaba, you know that it has been in its downtrend and it could probably dip further. Why not wait a little longer, sell your positions now, and you can enter at a much cheaper cost? In theory, it sounds all nice and dandy, right? I think we are committing a very inherent bias here, called the hindsight bias. People really think that they are fortune tellers who can predict the stock market from here with high level of accuracy. It's always a probability game. You might be right, you might be wrong. This time, you can be right about your prediction, but what's your hit rate? And if you are really that good, I think you should quit your job today. Do day trading instead. I think you'll be really rich in no time. Anyway, my philosophy is simple. I understand the company, I evaluate the risk-return framework surrounding it, estimate an appropriate valuation after taking into consideration both the broad market and firm-specific risks, apply a margin of safety, and most importantly, have a very clear grasp of my own thesis. Side note, if you are into stock picking, you are probably trying to beat the market. The market is generally efficient, less those picks like GameStop and AMC. So you better be bloody sure why you think you are smarter than the general markets, and what exactly is everyone in the markets missing. And of course, when or even how long will they take to realize this gap before you having the ability to build up your position. And since Alibaba checked off all these lists, I'm willing to buy the dip, and to me, it's just a gift that never stops giving. For the rest of you who are not into this sort of game, just buy into an ETF. I think you'll be better off in the long run anyway, at least statistically speaking. Anyhow, I know we all like to think ourselves as the messiah of investing. You guys work your ass off to accumulate capital, to prove your worth in the stock market, so you better make your money worth your time. Being able to beat the market for 3 or 5 years is not amazing. Investing legends have a track record of 20, 30, or even 50 years. There's a reason for that. So as a fellow human being, stay humble, my friends. you don't know when you'll fall. I will also like to end off by saying that even though I use the term clowns a lot on my channel, it's just a form of expression. I mean no harm, and I too call myself a fellow clown. So my baseline is, I wouldn't screenshot a picture of a person I'm targeting to name and shame. It has really come to a point where I feel like we are elementary school kids bickering over whose dong is bigger. Take it from someone in their early 20s. It's not worth the time and effort, especially the editing tool. With that, I love you guys and I'll see you in the next video, but more importantly, I'll see you on the moon. Goodbye!